It therefore says to us, thank you. We see now the recording has started. Thank you, Mr. Mate. We all learn. Once the owner is kept distinct or totally different or separate from the business, I'm saying the business will never start, because the business as a separate entity has got nothing. It cannot even buy itself a computer. It cannot buy itself a chair. It cannot even pay rent. Therefore, it becomes important, and this is one concept, the fourth concept which we are learning today. It becomes important that the owner of the business will take his private funds and invest those funds in a business, separate entity, yes, in order to start this business. Each business is started by the owner funding its commencement of business. And that first money, those first funds which the owner puts inside the business in order to start the business, that in accounting we call capital. Let's recap. I want to start a business as a legal practitioner. The only thing I have is my certificate of admission as a legal practitioner from the High Court. How am I going to pay rent? How am I going to pay salaries? How am I going to buy furniture? All those. Then they say, myself as a private individual, put money into the account of the business so that the business must start running. Therefore, strictly speaking, the business owes the owner the money it received at its commencement. If the owner puts 50,000 rand into the business, it means the business owes the owner the 50,000. Let us make an easy illustration. I want to sell cigarettes at Lpbk, where we all are attending. And I go to a shop and I buy a packet of 20 cigarettes, and that I buy for 20 rand. I come to the school and I sell each cigarette for 50 cents. Whoa! I can see everybody is like, that business is not going to fly. Why is it not going to fly? Because the business is not going to make a profit. I think we are all clear with that simple example. It's a simple illustration. Let's improve the price. Packet of 20 cigarettes, bought for 20 rand, and I sell each cigarette for 1 rand. Still, some of you are saying, that's not a business, because you are selling for what you bought for. You're not gonna make any profit. But I will tell you now, I'm still actually working at a loss, because in fixing my price for 1 cigarette, I must also take into account the costs of acquiring this packet of cigarette, which is transport. And perhaps, without being political, that is why a packet of cigarette in a rural area is more expensive than the packet of cigarette in the city. Because in the city, despite buying bulk, in the city, the cost of acquisition is lower than in the rural areas. So let's go to our rural areas and support those businesses, even if they sound expensive because their acquisition is expensive. Then in my business here, I can easily say, yeah, let me sell one cigarette at R1.50 or at R2. Then immediately people are thinking, oh, if you sell at R2, it means you are going to make a profit of 20 Rand per packet of cigarette. That, dear students, makes business sense. And that is why we then say, oh, this man is in business of selling cigarettes. Of course, when I sell these cigarettes, there are many other factors which will influence the price. For instance, I must make provision that some cigarettes may be broken. I must make provision that some cigarettes may be defective. And when the customer brings it back, it is a loss for the business. Then in fixing my price, I am absorbing all those possibilities. It is easy if we are to talk about selling cigarettes, 20 cigarettes. Let's complicate it a little bit. I am at Lpbk and I am selling tea, bread, butter and cheese and peanut butter and jam to the students. Here am I recording my transaction. I buy 5 loaves of bread for 20 Rand each. It means I am going to spend 100 Rand. I buy 20 sachets of butter at 5 Rand each. I spend another 100 Rand. I buy sugar, 100 sachets at 3 Rand each. I spend 300 Rand. And I buy coffee, 3 Rand each, and I buy 100 packets of coffee, and then it's 300 Rand. Now, when I look at the total which I bought these commodities, I spent 800 Rand. How do I explain this? Dear students, it's easy. I have recorded all the transactions, meaning when I buy bread, I will record that I bought bread and I will even have a receipt for that. When I buy coffee, I will record that I bought coffee and I will have a receipt for that. Then I come at the school and I sell each sandwich for 5 Rand. And I say, if you give me 5 Rand, I will give you coffee or tea for free. Then I decide I'm selling 1 sausage for 5 Rand. On the first day, I sell 5 at 5 Rand each. Then I've received 25 Rand. Dear students, every time one student buys, when Thabo Mutiba buys, I give him the bread and I record that I received my 5 Rand. Ntate Molepo buys, everyone who buys gets a receipt. What does that mean? I am recording my transactions. In recording my transactions, already your knowledge will tell you I am complying with bookkeeping. The third day, I sell 3 for 5 Rand, I receive 15 Rand. The fourth day, I sell 6 for 5 Rand, I receive 30 Rand. On Friday, I sell 10 for 5 rand, I receive 50 rand. Now I sit at my corner and I start checking. For this week, I have sold a total of 170 rand. I bought for 800, I sold for 170 rand. I have kept all the records, meaning I have complied with bookkeeping. The question comes, did I account? Remember, accounting must disclose to us whether I am making profit or not. If I ask you the question in my scenario, am I making profit? I'm going to have divergent views about it. Some people would say, no, you are not making profit. Others would say, yes, you're making profit. Some would say, no, we can't tell. Others, but the fact remains, although I have recorded the transactions, I have not accounted, in the sense that nobody with the data available can tell whether I am making profit or not. Therefore, although I have complied with bookkeeping, I have not complied with accounting. Perhaps on Wednesday, I realized that no, this bread is going to be finished. I bought another 5 loaves of bread. The question which lingers in your mind always is, how much of the bread is left? How much of the sugar is left? How much of the coffee is left? And the moment we know how much of each of those is left, that will make us closer to determining whether we're making profit or not. It was easy with cigarettes because every time you sell 3 cigarettes, you know you are left with 70. But in this case, you need now to record your transactions in a way that it is understandable. Then accounting says to bookkeeping, although you have kept the records, somebody coming in will not understand. Why don't you design a structure where you will, that is accounting now telling bookkeeping. Why don't you design a structure where you will record all the transactions as they happen or as they occur? If you take out bread, record that 1 bread is out. If you acquire bread, record that the bread has been acquired. So that we should be in a position to assess the movement in and out of our business. Then accounting said it would still be better if each item you are selling can be recorded separately, so that we must be in a position to see movement in and out of each item. Then came the solution. Accounting then said it will be easy for us to record these transactions in a structure which looks like a capital T. The capital T I have here at the back. Now, when we have this capital T, we give the capital T a name. Here is our capital T. What are we going to record in this capital T? we are going to record bread, and then let's give this tea the name bread. Therefore, all the movements which involves or which will affect bread will be recorded in the capital T for bread. You need to mute. You need to mute your speakers, dear students. Otherwise, we're going to hear things here. Thank you. The same principle we are saying. Here is an instance where we are recording coffee. So, whenever there is movement which affects coffee,
sir, you can't see.
Pardon?
Can't see. I can't see anything.
You can't see anything.
No. The board. I can't see anything on the board.
I can see from this side.
I can't see from this side. I think it's the quality of the picture. I can't see nothing at all.
No, but I can see from here as well.
And Mate can see from here in the office.
Yes, isn't it Mr. Mates in the office? Mr. Talis also there is seeing is the presenter. Obviously, the two of you will be able to see, but from our side, it's just glaring.
No, sir, I'm sitting away from Mr. Mate. I'm in away from Mr. Mate. I'm in my office. Mr. Mate is in Edupark.
I have just spotlighted the board. I'm not sure if you guys can see it now.
It's clear now.
You can see now, it looks better.
Okay.
I don't see, but anyway, because you are recording, maybe we'll see the recording, it will be fine.
Thank
but
you.
Now we still cannot see.
But let us have it even on our books. Let's take notes. We are making a capital T, and we are saying this capital T, we give it a name, and we say whenever there is movement in a bread, we will record that movement in a capital T called bread. I can see clearly here. Now, this is also our take-home lesson for the day. Bookkeeping then says, we are not just going to have a capital T and call it a capital T. The capital T is called a ledger. So whenever we record, we will record bread in a bread ledger account. Why do we call it account? Because that is where we are going to explain the movement of bread. And accounting goes further to say, we will then call the left-hand side of the T account, we will call it the debit side. And the right-hand side of the T account, we will call it the credit side. Therefore, dear students, if I say to you, credit bread with 5, I expect you to go to a ledger account called bread, go to the right-hand side and enter the figure 5. When I say debit bread with 20, you go to the left-hand side of the ledger account where bread is recorded, and you enter 20 on the left-hand side of the T account. This entry or these sides are called debit on the left, credit on the right throughout in accounting. Whether you are a professor in accounting or a student in high school, the left-hand side is the debit side, the right-hand side is the credit side. When we start with our exercises shortly, one exercise will say to you, debit cash. What does that mean? It means open a T account, which is a ledger account, go to the left-hand side of that T account, enter the value of the cash, and call that T account cash. A transaction will also say credit capital. What does that mean? Same easy principle. T capital, name it capital, go to the right-hand side and enter the figure. It's as simple as all that. So at least today, now we know what is to debit and what is to credit. We must now learn at what stage are we debiting and why are we debiting, and at what stage are we crediting and why are we crediting. Dear students, I almost said it in my mother tongue. I'm not sure whether I'm allowed to say it, but I will say it. It's true. If we are to understand when are we debiting, when are we crediting, we are done with bookkeeping. Done, dead, buried, all we need is a tombstone. And that is where I'm saying to you, come with me, understand the process. Understand the process. If you can understand the process, and when we give you a transaction, you know this is now our turn to debit. This is now our turn to debit. Dear students, it doesn't say we must guess. No, we're not going to do guesswork. We're going to understand that this calls on us to debit. This transaction calls on us to credit. Now, for us to understand why and when are we debiting or crediting, bookkeeping gives us an equation. The equation says assets, write with me, assets equals to owner's equity plus liabilities. Assets, the total of what the business owns, is equivalent to what the business or the owner has invested and what the business owes to other people. I'm looking at some student, some lady is surprised to see her face there. There we go. Thank you. Mavuma, the guest. Yeah, help me card also. Now with the equation, assets equals to owners' equities plus liabilities. Then we learn something very interesting. And I would want you to understand and comprehend this one, because this is the stage where I'm saying to you, bookkeeping is dead. Mavuma, are you coming right?
Yes, I'm coming right.
Can you hear me?
I can hear you quite clearly.
Okay, thanks to the lady helping you. Is that your daughter?
Okay, yes.
Thank you.
Okay.
Now, we coming to a stage where we're saying assets equals to owners' equities plus liabilities. Now, dear students, come slowly with me. And I say to you, when we are dealing with an asset, all assets will increase on the debit side and will decrease on the credit side. Already we know the debit side is the left, the credit side is the right. Let's be practical. I go to game store and I buy myself a chair for 1,000 rand. I'm now expected to record the acquisition of a chair. Now, in my mind, I must be in a position to analyze what is the effect of this transaction. And the effect is one. When I buy a chair, it means my business is acquiring an additional chair. And when I acquire an additional chair, the number of my chairs are going to increase. That is logic. The second part is, what is a chair to my business? A chair is an asset. And because a chair is an asset, I will then go and open a T account, call this T account chair. This is where I am going to record my chairs. And then I will say, what is a chair to me? A chair is an asset. What happened to my assets? My assets increased. Therefore, because my assets increased, it says to me, I must go and debit a chair, because a chair is an asset and all assets increase on the debit side. It's clear, eh? It's clear. Say, for instance, dear colleagues, now I'm getting excited because I see Mavuma is agreeing. It means she understands. Here am I go to a shop and I buy 5 chairs. I will then debit an account called chairs 5 times because the value of the chairs are not necessarily the same. Even if they are the same, each chair should be recorded separately. Then you come to my practice, you ask me, hey, how many chairs do I have? Should I take you around the office to count the chairs? No, I will just take out an account where chairs are recorded and you will count 1, 2, 3, 4, 5. Oh, I have 5 chairs. Now, my candidate, Mr. Baloyi, I bought these chairs because I had just hired 5 candidates. Now, my candidate, Mr. Z.A. Baloyi, has now qualified to be an attorney. Dear students, I don't have to go to, say, a legal practitioner called attorney. Let's just cut it short. Our time is a bit limited. He is now an attorney. And I say to my candidate, Mr. Baloyi, oh, take 1 chair to go and start your practice. Let's analyze the impact of what I just did. When I say to Mr. Baloyi, take 1 chair, it means effectively I will no longer be having 5 chairs. My chairs are going to reduce by 1. If I am going to record that transaction by debiting chairs, it means what? I am increasing the number of my chairs. Am I supposed to increase them? No. I'm supposed to reduce them because Baloyi is taking 1 chair with him. Therefore, instead of debiting an account called chair, what will I do? I will credit that account. Dear students, I'm not going to take a T-Pex and rub off 1 chair here. No. The trail must show that at some stage I had 5 chairs. Now, after having 5 chairs, because I was acquiring them, that is why I debited chair. Now I have given 1 chair away. I am now crediting this account called chair. Now you want to join me, Mr. Bopape. You're asking me, how many chairs do you have? You will easily see it is 5 minus 1, which I have given away. Another easy example I can give is cash. In accounting and bookkeeping, cash is an asset. We're not going to give all the examples of cash. I'll just give a few. Here am I in my business. I receive 2,000 rand. Always, dear students, there must be that shh sound going in your mind, because that is where you are analyzing the impact of the transaction. Get me tea and something to drink. When you receive cash, in your mind, you must start analyzing what is the impact of this transaction. The impact of the transaction is I am acquiring an asset. My asset called cash is going to increase. If it increases and it is called cash, how do I record that? Then you open your T account, your ledger account. Remember, what is the name of this ledger account? It is called cash. What happened to this cash? It was increased. Where do we increase our assets? On the debit side, then I will debit myself with 2,000. What is the impact of this transaction? The impact of this transaction, as I've recorded, is when I debit cash, it means I have received cash. 2 days, I decide from this cash, I want to buy books, and I buy 2 books, each at 200 rand. Total cost of the books is 400. That sound keeps creeping in, keeps coming back. What happens when I buy? I'm going to reduce my cash, and this cash which I am reducing is an asset, and an asset will only reduce if I credit that asset. What is the name of the asset which is involved here? It is called cash. Therefore, what must I do? Go to my account called cash and credit myself with 400 rand. If I credit now, I am taking it faster. If I debit any asset, the asset will increase. If I credit any asset, the asset will decrease. Let us now cross the equal sign of our equation. Remember, our equation says assets equals to owner's equities plus liabilities. We have seen that on the left-hand side of the equation, where we only have assets, assets increase on the debit side, they decrease on the credit side. But dear colleagues, the moment we cross the equal sign and we are now dealing with equities and liabilities, the rules change. All equities will decrease on the debit side and increase on the credit side. Same applies. All liabilities will decrease on the debit side and increase on the credit side. Let's play with 2 examples there. You come to my shop. I'm the owner of Macro. I wish. But I'm the owner of Macro. You come to me, full fellow. You want to start your business and you say to me, I need a desk, but I am not going to give you money. I need this desk on credit. I am creating a debt, and this debt means I owe you, Mr. Macro. But please give me the table. Let us focus on Macro. Macro is a liability to me because I'm now full of it. I owe Macro the value of the table, which is 5,000. When I get into my business, I must record the fact that I did not have liabilities. I have just created a liability, meaning my liabilities have now what? Increased. Let us look at an account called liability. Here is an account called macro, which is a creditor or a liability, which I've created. Because liabilities increase on the credit side, and I have just created this liability called macro, what must I do? I must go to the T account called macro and credit myself with the 4,000 Rand value of the table I've received. Mavuma, you are always before me, so I'll be checking with you. Are you with me? Do you understand?
Yes, I understand.
Thank you. You are going to be my yardstick. Maybe because you wear spectacles like me. I know Maluka is jealous. No, Maluka, don't be jealous. Put yourself there. Let me see you. Let us take this example of macro. Now, it's mid-month and I decide, oh, I have 500 Rand. I want to take this 500 Rand and pay macro. It's that sound again creeping in. We must never lose sight of the sound. What is the impact of me paying macro 500? The impact or the effect is I will no longer owe macro 4,000. I am going to reduce my liability. Looking at macro as a liability, where do we decrease liabilities? Liabilities decrease on the debit side. Remember that. So what am I doing with that 500? Thank you, Wunke. I've got a lady who's looking after me here. I'm indebted to her support and assistance. Thank you, my dear. What do I do with that 500? Dear colleagues, if I was to take that 500 and credit macro, is that entry correct? No. It is not correct because if I credit macro, I am increasing my liabilities. Am I really increasing my liabilities when I pay macro 500? No, I'm actually reducing them. Therefore, liabilities, because they reduce on the debit side, I must take the 500 and debit macro with 500. In that way, the liability of macro is no longer 4,000, but 3,005, simply because I have now paid the 500 Rand. Now, please, dear colleagues, remember this. It now answers the question, at what stage are we debiting? At what stage are we crediting? The answer is this. If you are dealing with an asset and your asset is increasing, you will debit that kind of asset. But if you are dealing with a liability and the liability is decreasing, you will debit that liability. Therefore, it does not necessarily follow that if we increase, we must debit. Because liability, if we debit, it reduces. I think we see that by now. If I want to reduce my assets, what must I do? Credit them. If I debit my assets, then my assets will increase. Here am I in the previous example where I am giving Mr. Chauke my chair. What do I do with my asset account called chair? I must credit it. And when I credit, the assets reduces. But if Chauke was a liability and I was to credit Chauke the liability, my liability would increase. Therefore, let us bear in mind that it is always important to know what kind of an account are we dealing with. Let us go to capital. Remember, capital is the first money which we put into the business. And owner's equity means the equation of what the owner owns in our business. Hey, what does he own? He will own the money he gave us to start the business. You will remember that. When we started the business, we had nothing. The owner put money in the business, and that which he put into the business is called what? Capital. It means that is what the owner owns as his equity. Therefore, always when we say equity, we are talking capital. Where does my capital increase? Here is Molepo, who is starting his business by putting in 50,000 Rand capital. Dear students, if you are going to put 50,000 and debit capital, it means you are reducing capital. Is it reducing? No. It is actually what? Increasing, because capital behaves like a liability. Remember, we said owner's equity increases on the credit side as well as liabilities. So what must we do with capital? Students, I'm not talking capital, the cash component. I'm talking capital where we're recording what we owe the owner. Then I must go to capital and credit capital with 50,000. What is the impact of crediting capital with 50,000? If you look at our structure there, it will tell you exactly that it means our capital has increased. 2 years thereafter, Mr. Mohale is joining you. For Mr. Mohale, if he puts in 70,000 Rand, for him, that is what? Capital. Are we going to increase the same capital? No. We will then open another account, call it capital, and give it the name Mohale, because that is where Mohale is owning. That is the equivalent of what Mohale is owning. But if we were to take this 70,000 and add it to the capital which exists, then we are going to have 120,000. Then it's going to be difficult to know who owns what and how much. That is why you will always find some people saying, I am a majority shareholder, or I am a majority partner in that firm. It simply means my capital account is higher than others. It is making sense now. I'm taking questions as they come. Dear students, write me a question there, put a question there so that I must take you with me. Now, I am sitting with a table where assets increase on the debit side, equities and liabilities increase on the credit side. Now, in all accounting, we have 5 types of accounts. We have dealt with 3, we are left with 2. The 3 which we have dealt with is assets. Dear student, there is no account which we will ever give a name and call it asset. We will have an account and call it furniture. We will have an account and call it a table. We will have an account and call it a chair, but we know that a chair is an asset. So asset is an overall name. A chair is a type of an asset. Hence, I say we have 5 types of assets. 5 types of accounts. Assets, equities, and liabilities. We have treated these 3. The last 2 types of accounts which we should treat are income and expenses. I'm going to give you how incomes behave and how expenses behaves, and then I'm going to distinguish between expenses and liabilities so that we must be on the same page. All of us expect that an income will behave like an asset, but no, an income behaves like equities and liabilities. Therefore, dear students, when we are dealing with an account which is an income, it will increase on the debit side and decrease on the credit side. Whereas an account which is an expense behaves like an asset. Our expenses increase on the debit side and decrease on the credit side. Let me now distinguish between expense and liability so that we must know. This is a very loose way of making you understand. A liability will be in respect of an asset. For instance, when we bought that table from Macro on credit, we received an asset in return of a liability, whereas an expense will be in respect of value. For instance, if I pay rent, rent is not an asset in my books Instead, it is value. It means my business is deriving or is enjoying value out of occupying the premises of the landlord. I see Tessia Makhaila's hand is up. Tessia, yes, you are on.
Oh, thank you. I want, can you please repeat the behavior of the income and expenses?
Thank you. Expenses behave like assets. Expenses will increase on the debit side and decrease on the credit side. Whereas income behaves like your equities and liabilities. Income increases on the credit side and decreases on the debit side. Tessia, you're with us now.
Yes, thank you.
Thanks, ma'am. Now, I was at the point, Mr. Makoti, where I am distinguishing between a liability and an expense, so that we must know which is which here. And I'm saying, if we talk a liability, that will be in exchange of our business acquiring an asset. Whereas when we talk of an expense, that will be in exchange of our business acquiring value. For instance, if I employ you as my driver, come month end, I pay you a salary of 5,000. Did the business receive any asset? No. Instead, the business received the value of your services as a driver. Therefore, the salary is an expense. It is not a liability. Come month end, I've been using my phone. I'm not talking about the physical instrument, but I am talking an instance where Telkom is sending me an invoice for using the phone. Can that be in exchange of receiving any asset? No. Instead, the office has used their value. The same applies. This is my last example. I am renting my premises in 50 Schoeman Street. Come month end, the landlord says to me, hey, pay me 15,000. Let's analyze it. Did my business receive any asset for the 15,000? No. Instead, my business enjoyed value in that it occupied the premises. Therefore, rent is an expense. Let's recap. Two types of accounts will increase on the debit, your expense and your assets, and will decrease on the credit. On the other side, three types of accounts, your income, your owner's equities and liabilities will increase on the credit side and decrease on the debit side. Let me give you one example. And we must be in a position to understand this example. In May, for instance, my business is occupying your premises. You send me an invoice of 4,000. What do? I go to my books. I open a T account. I call it rent. What is rent to me? It is an expense. The balance of an expense increase on the debit side. Therefore, I will put in 4,000 here. This is my May rental. My April rental. Come May, you send me another invoice. What do? I pay you the 4,000 and I write in here again another 4,000. Now you will see that it is not the rental money which is increasing, but the balance on the rent account which is increasing. Am I clear there? Every month when I pay rent, the balance on this T account called rent will be increasing by 4,000. That is why when we're going to read the book, it will say expense have got a debit balance because expense increases on the debit side. I need to pause a bit and allow you to reflect because you need to understand what I am saying. We have now treated all the 5 types of accounts. I see the Tessia's hand is up. I'm trying to put Tessia in and I am not succeeding. I see DN is also up. I am not succeeding. Ooh.
We can do that ourselves.
Oh, you can do that. Okay, DN, talk to me.
Thank you, sir. Why are we not now removing? Why are we not crediting the 4,000 of the April account in this rent thing?
No, we have done it.
It's only on debit. Shouldn't it go on rent so that we have the new balance again alone there?
No, here is the account called rent. We have debited April, we have debited May. Every time when we pay rent, we will debit the account called rent. We will debit the T account called rent, the ledger account of rent. I hope you understand me. Let us take Mahlaela Teresia. Teresia?
Thank you. I wanted to make sure that I'm following. So when we talk of the debiting and the crediting side, we are looking at the balance when we speak of increasing and decreasing.
Yes.
Oh, okay. Thank you.
You're welcome. Deliwe, your hand was also up. Deliwe?
It's the same DN, so I'm answered.
Oh, thank you.
Thank you.
So all questions are answered. Now, perhaps to come back to tertia. Here am I am paying rent. What am I going to do with the 4,000? I will debit rent for 4,000 because every time I am paying rent, the balance of the rent which I have paid will increase. We are not increasing the rental amount. We are not saying the landlord has increased rent. We are saying the balance of this account in our books called rent is increasing every month. It's different, dear colleagues, if my landlord is going to say from June, your rent is 5,000. Then it means now the balance on the rent account is no longer going to increase by 4,000. It's now going to increase by 5,100 because this is the new rental amount. But in this case, we are not talking increasing the rental amount. Instead, we are talking increasing the balance of the account called rent, which is an expense. And that account must always have a debit balance because rent increases on the debit because rent is an expense. I'm making sense. Thank you, Mr. Makoti. Thank you, Mr. Makoti. I see you are nodding there with a very nice head. Maybe you're going to donate that head to me. Let us take this example. I just hope we can see as I write here. Here is this account called cash. Teresia, when I receive cash, because cash is an asset, what am I going to do? I will debit that amount of 5,000 which I've received. When I spend cash, because my cash as an asset is going to reduce, assets reduce on the credit side, I will spend that amount of 4,000 on the credit side. So if I say credit cash, it means I'm actually saying use the money. If I say debit cash, I'm actually saying receive the money in your books. It is now 20 to 7. Maybe let me finalize this and then we're gonna take, because our time is limited, we must be off in no time. Some of us have to drive to Mamutintan. I'm actually saying it doesn't take you to stay in town to understand bookkeeping. Look at me, I understand bookkeeping and I'm from Mamutintan. This is the last lap of our lesson. And if we can understand this last lap, boom, I am a happy man, Mr. Magoti. Accounting. Remember, accounting is the one which is now telling bookkeeping, because bookkeeping is just recording. But accounting says you must record it in a way that I will understand. Accounting now says, and this is where I want you to understand me, please, I'm even thinking, if you don't understand me, just pretend like you understand me. Accounting says, whenever we have a transaction, that transaction will have an effect on two accounts. And those accounts, one will be debited, the other one will be credited. That is accounting. It says that to us, and we are going to illustrate that with about 5 examples. But let us understand the rule first. The rule says, whenever we are given a transaction, this transaction is going to affect two accounts. One account is going to be debited, another account is going to be credited. Let us now implement that rule, and that is our last rule. That is our last rule. It's going to take us a few minutes, but after playing around with this rule, then you will understand, this was easy. I buy a table for 5,000 rand. That is an accounting equation. It calls on us to record it. The rule just says to us, two accounts must be affected. Must be affected. What do we now do? We go to our books, we open one account, we open another account. There we are having two accounts. What did we do? We bought a table for cash for 6,000 rand. Now we start analyzing that. This transaction must have two entries. The one entry says, when we buy a table, we acquire a table. We acquire an asset. Therefore, go to your books, open an account, call it table. Dear students, dear colleagues, don't ever call it asset. Call it table. What happened to your tables? They increased, isn't it? Therefore, debit table with 6,000. Remember, the rule says two accounts are going to be involved, one on the debit, another on the credit. But, wait a minute. We did not only acquire a table, we also spend money. And when we spend the money which is called cash, what happens to our money when we spend it? It reduces. Therefore, how much did we spend? 6,000. Therefore, the second account which is going to be affected is called what? Cash. And it is affected by reducing, and we reduce it by crediting 6,000. Let us look at the rule. One transaction, buying a table for 6,000, has been recorded twice, one on the debit, one on the credit. Dear students, it does not matter whether you start with one on the credit or one on the debit, as long as at the end, one account is going to be debited, another account is going to be credited. Don't ever credit and credit. The rule says one must be credited, the other must be debited. Don't ever debit and debit. No. I saw it. The rule says one must be debited, the other must be credited.
Thank you. So I needed to check when we buy then that table on credit. How do we then?
We come into that.
Okay, thanks.
Mlepo.
Yes,
McDonald.
sir. Yes, sir.
Do you understand the one where we are buying by cash?
Yes.
Good. Maybe now that you asked, let's come to your question. Dear students, dear colleagues, here am I buying the table on credit. When I buy on credit, what does that mean? It means I am going to create a liability. Is cash involved there? No, cash is not involved. Thank you, Mlepo, for the question. Let us play around with that. Cash is not involved, but we have acquired a table, and remember this transaction must be entered twice. Then we open another account, which, because we have already debited 6,000, this time we must credit 6,000. Remember, one must be debited, the other must be credited. But what is this which we are crediting? It is a creditor. It is a liability. Where do my liabilities increase? My liabilities, if you go to that structure which we started with, liabilities increase on the credit side. Then here we go, gain. Liabilities have increased. Let us take it further. Go. Come month end, I pay gain 1,000 rand. Let's analyze that. Let's analyze that, Molepo. McDonald, let's analyze that. If I pay gain 1,000 rand, am I still owing gain 6,000 rand? No, I owe gain 6,000 less what I paid. Then I go, how do I pay gain? I pay gain using cash. When I pay with cash, what happens to my cash? Is it going to increase or is it going to decrease? It is going to decrease. It is going to reduce. What is cash? Cash is an asset. That is the inquiry which must always go through your mind all the time. That is the part of you analyzing this transaction. Now that your cash is reducing with 1,000, what do? You go to your cash, you credit cash with 1,000. But the rule says, remember, the rule says each transaction is entered twice. This time, we have only entered it once on the credit side. Somewhere we must enter it on the debit side. And where is that somewhere? It is on gain itself. Then here is that 1,000. We have credited cash with 1,000 and we have debited gain with 1,000. Let us analyze gain. When we had no liability, our liability increased by 6,000 when we bought the table. But when we paid 1,000, our liability was reduced by this 1,000. Where do your liabilities decrease? Your liabilities decrease on the debit side. Remember that. Therefore, the transaction looks like this. We bought a table for 6,000, we debited table. We bought it on credit, we credited gain as a liability. We went and we paid 1,000 rand and reduced that liability by debiting that liability and crediting cash as an asset. Now I'm talking good bookkeeping and accounting language. And I see Makoti is smiling because he understands now. Things are falling into place. Things are falling into place. I wish I could sing. Then we can all join and sing that things are falling into place. Anyone with a question? Molepo, you are now cleared now.
I am covered, sir. Thank you very much.
That's why I'm here. I'm here to cover you. DN, Delaware, are you covered?
Yes, I am.
Oh, Irene is also here. Irene, come on, dear colleagues. I'm not going to call you one by one. Irene, are you also with us?
I'm covered, sir. Thank you so much.
Ah, this is so exciting. Ah, I feel like I should just go home because everyone else is covered, eh? Hey, man. Auntie, these things are so easy. I can hear you all saying, ah, these things are easy. Exactly what I said when we began, that people come here, they intimidate you, you think these things are difficult, and they saying, no, it's only me who can pass, you can't pass, you can't understand them. But here we are, we all understand them. I am so excited. Hey, Mudieri, how are you? Mudieri is not with us. Or some people joined here using other people's names. Okay, let's pass Mudieri. Leah, are you with us? Leah, do you understand? Leah is not even attending. She just logged in and left. Let's try the last one. Ramohopa, Khosi Ramohopa, do you understand?
Of course, sir. I'm following.
You are sorted.
Yes, sir.
All right. Maybe after speaking, remember to switch off your mic so that maybe other students can't log in because all our mics are on here. Makoti, I see your mic is still on.
It's okay. I'll log it.
Good.
Let me mute.
Good, good. Molebogeng, are you with us in the same class? Do you understand?
Yes, sir, I do understand.
Oh, great, great. So far, my analysis or my assessment is everybody else understands. Please, dear students, if you don't understand, find it within you to raise your hand and ask me a question. Where we are at a stage where we can start playing around with these questions. Oh, let's take Manzana. Manzana, your hand is up. Please talk to us.
Sir, can we please have another example?
And another example of what, my girl?
Another example similar to the one we were doing right just now.
Involving what kind of an account?
Where an example where we made a transaction and then we did it on credit and then we later on paid maybe half of the money we were owing.
Okay. Thank you, Manzana, for the question. Manzana, I'm going to talk to you, and as I talk to you, other colleagues should put themselves as Manzana or in the place of Manzana. Manzana, you go to a shop and you buy a computer cash. I'm recording that transaction with you. You obviously know that we are going to open 2 T accounts. One account is going to be debited with 10,000. Another account is going to be credited with 10,000. You are with me so far, Manzana?
Yes, sir.
No, remain, keep your mic open. Keep your mic open because I want to talk to you. Keep it open. Now, what is the account which we are debiting with 10,000? Shh, we start thinking now. That must be the account where we are acquiring the asset. And what asset did we acquire? It is a computer. On the other hand, we have used cash of 10,000, and when we use cash, the cash is an asset. It is going to go down in value. It is going to reduce. Therefore, that is cash of 10,000. You are with me so far?
Yes.
Now, this time we are not using cash because you don't have 10,000. You go to the store called Game and you say to them, please give me this table for 10,000. And they give you the table for 10,000. Are you paying them any cash? No. Instead, you are starting or you are commencing a liability called Game. Remember we said a liability is where there will be an asset in return. What is the asset in return? It is the computer which you have just acquired. Then here we have Game 10,000 as a liability. You are with me so far, my dear?
Yes.
Now it is the middle of the month. You have cash and you feel rather you eating this, not eating, rather you spending this cash. Let me take this money and reduce my liability or my debt with Game. Go to your structure and check. What must you do to reduce a liability? You must credit that liability. You are with me so far?
Yes.
Then I go to Game and I paid 2,000 Rand because I am reducing my indebtedness, my debt with Game. I am reducing that by 2,000. But on the other hand, this 2,000 must be entered how many times, Manzana?
2 times.
Twice. One on the debit side, another on the credit side. Already we have entered on the debit side when we reduced the Game liability. Then we must credit cash because we used cash to pay the liability or to reduce the debt. Do you follow it now, my dear?
Yes, sir. Thank you.
You're most welcome. You're most welcome. Dear students, there is no question which is wasting our time. All questions are valid questions, and I will take my time to explain them because that is why I'm here. Let me get more questions. Raise your hand and I will give you an opportunity to ask. If we don't have questions, it is now 7 o'clock. I will request that let us take a 10 minutes break. Dear students, 10 minutes is 10 minutes. In 10 minutes, I'll be sitting here continuing with the class. Let us take a comfort break of 10 minutes. So we are back live 7:10.
Thank you.
Right, I am back. It's exactly 9 minutes. We still have 1 minute to reflect a little bit. This is the time when I can give you an opportunity to ask me any question on what we have treated